earlier you brought up the point on R&D tax credits. So let's talk about that. Can you give a TLDR on what that is and who typically qualifies for that?
Yeah, so R&D tax credits, basically every single tech startup in the US, I mean, obviously this is US tax code. So if you're not a US based company, this might not be as helpful for you, but there's probably something in your own home country as well around this line. But the whole idea of R&D tax credits is that the government wants to incentivize earlier stage companies to do research and development. They want you to do more of it. They want you to build great new things. They're using the tax code to essentially incentivize behavior, which is what the tax code is about in many cases. So that's a different discussion, but like that's generally what it's about in many cases anyways, is to incentivize certain types of behavior. So in the US, if you're doing a lot of research and development, which every single startup is doing some amount of R&D, it varies in different ways. But I think even if you are, let's say, a direct-to-consumer company, you're doing R&D, you're figuring out how do I get this awesome new piece of clothing or product or whatever it is into the market. And so there's R&D involved. Everyone from the CEO who's spending maybe 20% or 50% of their time in R&D, down to your engineers and your product people are spending time on R&D. And so you can get a pretty significant percentage of the people who are working in R&D of their salary back from the government. So it helps you essentially fund some of your actual R&D because the tax credit can be pretty significant in what you get back. It only lasts for a certain period of time. So there are some nuances there. So you need to do it. You kind of have to use it or lose it sort of thing. Once you get either too big or too old as a company, you're no longer eligible for the R&D tax credit.
Gotcha. And you mentioned that outsourced CFO services may not be the right path to kind of claiming it. What's the best practice on who you should hire to get this done or how you should get this done?
Totally. So there's also a ton of tools out there that in the past 3 years have come out to make it really, really, really easy to understand which tax credits you're eligible for and to get paid for those credits. So as an example, some of the tools like Gusto actually enable you, if you use certain types of software, the tax credit will go straight onto your payroll. Or off of your payroll, kind of offsetting your payment. So it's really easy to use. Now there's a ton of different software out there. So the two big ones that come to mind, or the three, would be NeoTax, which is one that we partnered with. We really like. They're very new, but they use a ton of technology to do this really well. Their price is lower than most people in the market. So most of these software tools take a percentage of the credit, which is a good trade-off since it's sort of free found money. But of course, if the amount of percentage they take is 20% versus let's say 10% or less, that can be a significant difference to you as a startup. Yep. So NeoTax is one we really recommend. Main Street is probably the biggest and most well-known. Pilot recently launched some of their own R&D tax credit services as sort of part of their overall sort of CFO services bucket of things that they're doing. So there's a bunch of different options out there. The one thing I will say is it's difficult to read through their information and understand the nuances of each. Sorry about that. Let me put on Do Not Disturb to read through the nuances of what is in their plans to understand the differences. So we've actually written up some information to help you understand the pros and cons of different tools, how you should look at these, how you should understand pricing, because they really try to hide their pricing in kind of not cool ways in some cases. So that's one thing to pay close attention to. And then make sure they're doing a really high quality job because you don't want to miss out on money or have them do it wrong. And if they do it wrong, you actually could end up being audited, which would cost a lot more. So you want to have it done right by the right people who really know what they're doing, which is once again, one of these specialized firms and not, let's say, an outsourced CFO firm. So.
Yeah, makes sense. When do you typically need to do this? Is this like once a year by a deadline?
Yeah, so it is once a year. I think, don't totally quote me on this. I think the deadline, I don't think there's a specific deadline, but you do miss out if you don't file before the end of Q1 for the previous year's tax credit, you miss out on the previous year. So you could still file like, I think every quarter, let's say for this year, let's say, so this current year I could file for every quarter and you'd be okay. But usually what most people do is they just do it once a year and update it every year at time frame. So when you're doing all your taxes at the end of Q1 for the previous year, doing your tax credit at that time is usually a decent time to do it as well.
Gotcha. Makes sense.